This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom from master trader Nick Santiago. I'm Kerry Lutz. Today is a 126.22, show number 360. So we've come full circle now, Nick.
We really have come full circle. The markets have they've been decimated, and then we had that big Monday decline where stocks staged a major reversal to the upside. So that's still holding. So that's a positive out there for the bulls. But every trader right now is waiting to hear from Fed Chairman Jay Powell today. The FOMC announcement will be made at 2 p.m. They're going to conclude a 2-day meeting. Will they increase the speed of rate hikes as they've said they would? Right now, believe it or not, the central bank is still buying bonds. So we'll see how this goes. But we really are in the thick of it now. And it's been a real January to remember with the sell-off that we've just had.
Oh, my goodness. Yeah. Everybody's waiting with bated breath. I think there's a currency war taking place myself, international currency war between us and China. I think the tell was a week and a half ago when China warned the West against rapid rate hikes as they started cutting their own rates to try to bail out their over-leveraged and basically insolvent real estate sector, and maybe that was fuel to the fire. So it appears like the central bank is willing to destroy the U.S. economy to destroy the Chinese economy.
Well, there could be quite a bit to that. Right now, when you look at rate hikes going up in the U.S., that's going to hurt every global market. I don't think it's just going to be China, which China obviously does not want it to happen, and they verbally have communicated that to us. But it's going to hurt all of the markets. And again, I think who it's going to really hurt the most is going to be Europe. Europe's a disaster, and they've got a broken market, and especially a broken bond market. So I think the best thing for the market is for Jay Powell to get started on raising rates. And, there's a lot of chatter that today he may say that there could be a March hike. So we'll see if that does happen.
Yeah, well, look at the turmoil that's been created by the whole thing, lowering liquidity, everything else. Pretty much, if they're raising rates, it's because they have no choice.
They really don't have a choice when you think about it. Just look at the inflation right now. I mean, my wife just came home yesterday from the grocery store. She went to Whole Foods, and she just can't believe the price increases. And I said, this is nothing. What can really take place? I said, it always starts at the pump first. Then once it starts to hit the pocketbook at the grocery store, people start to realize it. But inflation is here. I mean, it's here and it's been here. And we called it a long time ago that it was coming. And, now people are really starting to feel the effects of it.
Yeah, it reminds me, I think it was a Nixon official. Everyone was complaining about inflation pretty much from the Vietnam War, guns and butter program. And they were giving advice on how to deal with inflation. And this guy, I think it was the Secretary of Agriculture, Earl Butz, said, just eat less. He didn't tell him to eat cake. He just said eat less.
Just eat less. Okay.
So that's my advice to you. And if you look at the state of the American physique, actually, if you did eat less, probably would have some beneficial effects.
I have to say that's pretty good, and it's pretty true. So we'll see if everybody starts to go on a diet here. But as for the markets, they need to be trimmed down as well because they got over bloated. I mean, they've just been experiencing quantitative easing really since December of 2018. Then they got another big injection after the COVID scare in February and March of 2020. So these markets have they're a bit over bloated as well.
Yeah, well, the market's kind of been on a carbohydrate, easy money fueled binge for years now. And I guess the chickens are coming home to roost, if we keep on torturing the food analogy here, Nick?
Yes, I believe they are coming home to roost. Honestly, Jay Powell has no choice. He has to stick with it. He's lost a lot of credibility over the years, and if he wants to regain it back, he's going to need to stick to his guns here and really just start to raise rates. I think we need about 4 rate hikes to get up to about 1% on the Fed funds. Generally, the Fed funds should track the 2-year note, and the 2-year note's above 1% right now. So the Fed is certainly behind the curve.
Yeah, as usual, and they're always behind when it comes to fighting inflation, which is why in a environment of rising rates, we often see gold take off, like it did in 2003, 4, 5, where there were 19 rate hikes by Greenspan, and gold took off.
Yeah, and sometimes that will happen, and that's why it's so important to watch the correlations. Right now, today, ahead of this announcement, gold is coming in a little bit, but it's been holding up very well recently. My only issue with gold right now is that it has a lot of work to do on the charts before it can really stage a meaningful breakout. So, right now we get up to that 1865, 1875 area. That's going to be a resistance point going back to mid-November, and that's a real test to get through there. But again, gold has been acting well, even though today it's pulling back a little bit ahead of the Fed. But after the announcement, regardless of what they say, gold is going to be in play. I'm not sure if it's going to go up, down, or all around, but it will certainly be in play. It always is on Fed Day.
So imagine, and I don't think it's going to happen, but imagine if after Powell says his piece, gold just goes up $10, $20 an ounce. What is that signaling? What would that mean? Well,
that would if that were to happen, it usually is an indication that the Fed probably is going to go at a slower pace. That's what I would take from it right away. So, if gold is calling Powell's bluff, the equity markets tell you really what these guys are going to do. They're always ahead of the curve. The market is forward looking. Even as gold has been slumping, really, in December it slumped, even in October it slumped. That was telling us, the markets were going to come in and the dollar would strengthen a bit, and then Jay Powell will have to increase rates. So the gold is always sending us a message.
All right. Finally, Bitcoin, it's holding up at the 35,000 level there.
Yeah, actually, Bitcoin, as we speak today, is actually at 38,000. So it's had quite a bounce. And like I said, that was a very good level. That pierce of 35,000 was going to be pretty strong for a while. So it's going to be very, very important going forward now to watch the pattern and see what kind of patterns are presented here or unfold. So basically 35,000, that level was breached. It was tested. It successfully held. So, you got to give Bitcoin the benefit of the doubt for now that it will hang in there. But chart pattern will be critical going forward. And, again, we'll see how high this can bounce. But it's not that big of a bounce right now, but it's holding up pretty well.
And we can't emphasize enough that it's still below every moving day average that there is, right? 50,
yeah.
100, 200, 20,
yes.
All that. The chart looks bad.
Yeah, on the daily chart is in a downtrend, no question about it. But where the strength lies in this equity is really if you look at the weekly chart. And that's why I always tell the traders, you have to look at all these time frames. You can't just get one message from one place because another place could be telling you something different. But if you recall, back in June of 2021, Bitcoin sold off pretty sharply. It actually traded down below 30,000. Then it did a retest back there in July of 2021, where it went down and made a higher low, and then it rebounded before making a new all-time high. And anytime you have a level like that, where you have a successful back test and then a reversal, that's where big money lies. So that's what we did. We went exactly down recently on this last fall in Bitcoin down to 32,800 on the futures. And that's exactly the reversal point. So that's where the institutions lie. That they're the ones defending it there. It's not the mom and pop at home that are in Bitcoin. So that's a very good institutional support level.
All right. Well, I guess we'll leave it at that for now. Go over to inthemoneystocks.com, see how Nick has beaten the averages for decades. The Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Your emails are always welcome, kl@kerrylutz.com. Nick, we will talk to you on Friday.
Sounds good, Kerry.